we'll send you the link to our YouTube channel. We urge you to watch, like, and subscribe. If you experience technical challenges, please send us a message in the chat, or you can send a message to our email address, and we'll be sure to address it as soon as possible. So we hope that you have an enlightening session, and we hope that this expose helps us with the tax reform in the coming year. Thank you very much, Mr. Ayo. Thank you very much, everyone.
All right, thank you, Barrister Princess. So she has given us the breakdown of our house rules. So please, you will do us well by abiding by her, because the whole essence of this webinar is for knowledge to be imparted by our facilitator. And if any of these rules are breached, we won't be able to achieve that. So having said that, we'll go ahead with the opening remarks by the principal partners of the Law Hub, solicitors and advocate in person of Professor Adeolu Konde, PhD, ably represented by Barrister Obajide Ilugbo. Please, Barrister Obajide Ilugbo, please, you are on. You can unmute your mic.
Okay.
Thank you so much, sir. Please, you are on.
All right. Yes. Good afternoon, everybody. This is the welcome address, welcome and opening remark. I'm delivering it on behalf of Professor Adeolu Akande Esquire. He's our principal partner at the Law Hub Solicitors and Advocates. And I hereby read: distinguished participants, esteemed colleagues, ladies and gentlemen, it is my pleasure and profound honor to welcome you to this important webinar on Nigeria's tax reform. As the host of this program and the principal partner of the Law Hub Solicitors and Advocates, I am truly delighted to see the wealth of professionals, practitioners, policymakers, entrepreneurs, students, and thought leaders who have joined us today from different sectors and across different jurisdictions. Your presence is a testament to the growing recognition that taxation is no longer a technical issue reserved for accountants and lawyers alone. It is a national conversation that affects every profession, every business, every industry, and indeed the future of our economy. Today's session is designed not merely as a lecture, but as an interactive knowledge base, but as an interactive knowledge exchange platform. We're here to interrogate the present, understand the
No, I didn't.
your field. What you learn today enhances your efficiency and broadens your scope. Fourth, national development impact. A well-structured tax system is the backbone of sustainable development. This conversation positions us all as contributors to Nigeria's growth trajectory. 5, networking and collaboration. This gathering brings together minds with that experiences. The relationships formed here have the potential to spark future collaborations and policy shaping engagements. As we begin this important discourse, I encourage everyone to be open, engaged, and participatory. The success of this webinar relies not only on the expertise of our speaker, but also on the quality of your contributions, your questions, and your critical insights. Once again, I welcome you all. Thank you for choosing to be part of this transformative conversation. I am confident that the knowledge shared today will enrich us individually, enhance our professions, and contribute meaningfully to the ongoing evolution of Nigeria's tax system. Welcome to Nigeria's Tax Reform Webinar. Thank you, and God bless.
Thank you so much, Professor Adeolu Akonde, the principal partner of the Law Hub Solicitors and Advocates, ably represented by Barrister Obajide Ilugbo. Thank you so much for the opening remark. It gave us feedback as to what we are expecting in this tax reform webinar. So please, in no time, the next voice we'll be hearing will be the voice of our keynote, our facilitator. I beg your pardon. And by way of doing that, we'll read his profile briefly. We'll read his profile briefly. The profile of our facilitator in person of Mr. Bimbo Atilola. Mr. Bimbo Atilola specializes in labor and employment law and the law of taxation. He is the managing partner of Hybrid Solicitors and a former commissioner of the Tax Appeal Tribunal. Please, can we make welcome Mr. Atilola, who is our facilitator for the tax reform webinar. Mr. Atilola, you are on, sir. Thank you so much, sir.
So, good afternoon, distinguished ladies and gentlemen. Let me quickly say that I did not hear most of what you said. It appears your bandwidth is low. That is the notes I'm seeing on my system. So you may want to do something about that for effective communication this afternoon.
Okay, sir. Okay,
Once
sir.
again, my name is Bimbo Atilola. Mr. Ayodele, can you please share the slide?
Okay, sir. Are we, sir? Yes.
It's my pleasure to be with you this afternoon to share my thoughts with you on the basic fundamentals of the Nigerian tax reforms, strictly from legal and policy perspectives. This afternoon, I will be looking at the basic provisions of the four legislations, of the four tax laws enacted by the President, Federal Republic of Nigeria in June 2025. And I will also be looking at its implications for businesses, implication for individuals. What are the criticisms of these four tax laws? What are the prospects? And what are the opportunities for it for lawyers? Like the person that read the speech of Professor Deolu Akonde, like he mentioned, gone are those days when taxation is conceived as the exclusive preserve of chartered accountants. It used to be thought that when we talk about taxation, that it is only a space for accountants. Today, that view is no longer accurate, regard being had to the increasing frontiers, the expanding frontiers of tax law and practice in Nigeria. So admittedly, the computation of figures is for the chartered accountants, but because tax itself is law, taxation is statute-based. It is an elementary principle of taxation that there cannot be a tax without an enabling legislation. So every tax, every imposition of a tax for it to be valid must be backed by a legislation. And as we know, tax legislations can be made at the different tiers of government, at the different levels of government. Nigeria is a federalism comprised of 3 tiers of government: the federal government, which has the National Assembly, which has the power to legislate exclusively on matters listed under the exclusive legislative list, and by implication on tax laws or tax statutes arising from matters emanating under the items listed under the exclusive legislative list. For instance, it's only the federal government, it's only the National Assembly that can legislate on company income tax, because companies is strictly under the exclusive legislative list. It's only the National Assembly that can legislate on petroleum profit tax, because petroleum is under the exclusive legislative list. We also have the concurrent list where both federal and state can legislate. The point I'm trying to make here is that taxation is rooted in law, because before you can have a tax, an enforceable tax, a valid tax, it must be backed by a statute. It's going to be our domain. It is lawyers that will be approached. It is lawyers, our colleagues, that will be approached to discuss or to write legal opinion on tax provisions. And as I'm going to emphasize later in the course of this class, it's a big opportunity for us, because whenever there is a new legislation, whether tax legislation, whether labor and employment legislation, or company law legislation, there is usually the need for lawyers to render legal opinion to clients who want to know the true construction and interpretation of those provisions. So it's a good time for anybody who want to take advantage of the expanding frontiers to take interest in taxation. Because like I said, our opinions will be sought on interpretation of the new tax laws and their application. So basically, tax practice and taxation generally is a shared space between lawyers and chartered accountants. So chartered accountants, we have exclusive preserve on the figures and computation of figures, while lawyers, it will be within our jurisdiction to render legal opinion. The court will also be asked to give judicial interpretation of relevant provisions of the new tax laws, and it is lawyers that's going to formulate issues for determination to interpret. So as lawyers, we have a role to play. Now let's now go to what is the background to the new tax laws in Nigeria. As we know, the President of the Federal Republic of Nigeria on the 26th June 2025 signed into law 4 tax reform bills, namely the Nigerian Tax Bill, the Nigerian Tax Administration Bill, the Nigerian Revenue Service Bill, and the Joint Revenue Board Establishment Bill. And with the assent of the President, all these bills became law and to take effect in January 2026. The background to this tax reform is that since the inception of the current government, there is a major shift of attention from oil or petroleum income to tax income. The current federal government believes that the current state where majority of our national budget is being financed or expected to be financed by crude oil is no longer sustainable, and that we need to diversify. And the thinking today is that tax income can actually sustain Nigeria. So the need to expand the tax net, the need to reform our tax laws to generate increased tax form the basis for the new tax laws. And in pursuance of this objective, the federal government set up the popular Taiwo Oyedele-led Committee on Fiscal Policy and Tax Reforms, which committee was given the mandate to carry out an holistic review of the various Nigerian tax laws in force, with a view to recommend amendments, to recommend reforms for consideration of the National Assembly. So after the Taiwo Oyedele submitted his report, the recommendations were also brought to the floor of the National Assembly for public hearing, and same was passed by the National Assembly before it was eventually assented to by the President, Federal Republic of Nigeria. So the tax reform is therefore not only a policy and legislative response to the nation's search for sustainable revenue to fund its budget, it is also a reform that seeks to make Nigeria to diversify its source of revenue so that we move from our mono economy state, which is a very fragile and, for want of better word, very fragile and challenging situation. So the basic idea behind the new tax regime is to efficiently explore the country's potentials for the benefit of the economy. So, like I said, there are 4 tax bills that were signed into law by the president, and they became law, and those bills, having been passed by the president, became laws. And these are the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Board Act. Mr. Ayodele, you need to be moving the slide for the consumption of the of our audience. So you are still on introduction. Now, among all these 4 tax laws that were signed into law by the president, the Nigerian Tax Act stands at the core of the country's tax reform agenda. Because what the Nigerian Tax Act seeks to do, or has achieved, is to consolidate our entire national tax system, our entire national tax legislations into one single tax document. Before now, what we have in Nigeria are different tax legislations scattered in different tax statutes. So, for instance, for value-added taxation, we have the VAT Act. For petroleum tax, we have the Petroleum Profit Tax Act. For personal income tax, we have the Personal Income Tax Act. We have, for capital gains, we have the Capital Gains Tax Act. For casino, we have the Casino Act, and several other tax legislation. These are independent tax legislations enacted separately and in our different statute books. So, before now, the practice is that if you want to look for a provision under the value add, well, if I say before now, we are still operating the old act. So until January, we are still under the previous regime. So, but when I say before now, it should be read in that perspective. So, today, before the new tax laws take effect, if you need to study a provision or to check out a provision on the value-added taxation law in Nigeria, you look for the Value-Added Tax Act to check it. If you are looking for a provision under the Company Income Taxation in Nigeria, you go to CITA, the Company Income Tax Act, to check the provision, which are different statute books. And if you need to check something on personal income taxation in Nigeria, you need to go and look for the LFN, where the personal income tax is documented. So, what the Nigerian Tax Act seeks to achieve is to consolidate the entire tax statutes under one tax law. Meaning that, so whether you want to check provision relating to value-added taxation or company income taxation or PITA or any other, or petroleum profit taxation, what you simply need to do is just to grab the Nigerian Tax Act, which has consolidated under one law the various taxes that we have at the federal level. Now, what are the key provisions of the Nigerian Tax Act that we must be aware of? Section 197, subsection 5 of the NTA, that's Nigerian Tax Act, amends the Tertiary Education Trust Fund Establishment Act of 2011 by deleting relevant sections, particularly section 59, subsection 1. And in replacement of that section is a provision that creates a development levy of 4% imposed on accessible profits of all companies chargeable to tax under Chapter 2 and 3 of the Nigerian Tax Act. So before now, we have the Higher Education Tax Act, which used to be the former Education Act, the Education Tax Act. But what the new law has done is to amend the law by deleting the Tertiary Education Trust Fund Act and now have in place a development levy of 4% to be imposed on all companies that are liable to pay to tax in Nigeria. However, this 4% development levy does not apply to small companies and non-resident companies. Non-resident companies are companies that have no base in Nigeria. So small companies are excluded. Later in my presentation, I will be looking at some criticisms of some of these new tax provisions under the new tax regime. Now, Section 59(2)(a) of the NTA provides that the service, that is the FRS, will now be named as the Nigerian Revenue Service under the new law. So when I talk about service, it's under the new name. So FRS, now Nigerian Revenue Service, shall have the responsibility to collect and pay the 4% development levy into a special account, out of which the Tertiary Education Trust Fund shall take 50%. So out of the 4% development levy, a special account for tertiary education called Tertiary Education Trust Fund will take half of it. Now, by Section 197(13) of the NTA, it also amends the Student Loan Access to Education Act of 2024 by deleting Section 17(1). In replacement is Section 59(3), which provides that the Nigerian education loan shall take 15% out of the 4% tax imposed as development levy. So the Nigerian education loan scheme will have 15% of that of what 4% development levy translates to. Now, other major provisions of the Act of the NTA is there is increased exemption for small companies. Small companies are now exempted from company income tax, capital gain tax, and the newly introduced development levy. So which companies are categorized as small companies under the NTA? Small companies with annual gross turnover of 100 million naira and below, and total fixed asset not exceeding 250 million naira will qualify as small companies. Under the previous regime, the small companies are companies with annual gross turnover of 25 million naira and below. But under the new law, for you to qualify as a small company exempted from company income tax, capital gain tax, and the 4% development levy, so small companies are now defined as companies with 250 million naira annual gross income or gross turnover and below, compared to the previous 25 million naira and below that qualified as small companies. One major provision of the Nigerian Tax Act is the increase of capital gain tax rate from 10% to 10%, now 30%. This increase has been a subject of intensive criticisms by business owners, by business community generally, including various chambers of commerce in Nigeria. The business community are of the view that it is not a good time to increase capital gain tax from 10% to 30% for companies at a time when companies are groaning under other costs, including power costs, and cost of infrastructure. So some commentators believe that the increase from 10% to 30% for capital gain tax for companies can discourage investments and can also lead to capital flight out of Nigeria. Now, there is also a minimum tax for non-interest. Okay, before I go into that, let me look at restriction on tax exemption for three zone entities. From January 2028, full profit of free trade zone entities will be taxed if they make sales within the custom territory. In Nigeria, there are areas that is called the free trade zone, such as where Dangote refinery operates. A free trade zone is an economic zone created by the federal government to give special incentives to companies that operate within that zone. And one of the incentives that they used to enjoy is tax relief. But under the new tax regime, is that exemption as that tax exemption is now being curtailed. So under the new law, companies that operate under the free trade zone entities, with effect from January 2028, their profit will now be taxed, provided they make sales to custom territory. Custom territory are territory outside the free trade zone. The Nigerian Tax Act also introduced a more progressive personal income taxation. A tax is said to be progressive where it takes more from rich people and lower taxes from poor people. A regressive tax is a tax that takes a higher percentage from poor people and lower percentage from rich people. A good example of a regressive tax will be a flat tax. If you say, for instance, 5% tax on everybody in Nigeria, as an example, the people that will feel it are low-income earners because 5% of 100 naira is 5 naira, while 5% of 1 million naira will be, what's that? Will be 50,000. So the big man still has 950,000 with him, and therefore the 50,000 naira will be insignificant to him because of the kind of money he has. But somebody that you want to take 5 naira from his 100 naira, that is a major chunk of his income. So the personal income taxation regime under the NTA is more progressive in the sense that it is amended to take more from the rich and lower tax from the poor. That is for personal income tax. Now, another major provision of the Nigerian Tax Act is the introduction of zero tax, especially zero VAT on some essential goods. Some goods will not suffer value-added tax. Example, and that scope is expanded. The scope of essential goods and services that are exempted from value-added taxation under the Nigerian tax law is expanded under the new tax regime. So, and those ones that are exempted include basic food items, medical and pharmaceutical products, educational books and materials, electricity generation and transmission services, medical equipment and services, tuition fees and exports, excluding oil and gas exports. So it may interest you that legal services is not exempted. So currently, professional fees earned by lawyers will still suffer appropriate value-added tax. And as such, provision must be made for it on our invoices. Now, the Nigerian VAT income The new Tax Act provide a new sharing formula among the three tiers of government between the federal government, the state government, and the local government. And it provides that federal government will take 10% of VAT. I'm talking about value-added tax now, the current sharing formula under the new tax law. Federal government will take 10%. It used to be 15% under the defunct Value-Added Tax Act, VAT Act. Then state government will take 55% and local government will take 35%. I repeat, the income generated from value-added tax in Nigeria today, which is a federal tax, will now be shared among the three tiers of government in the following ways. Federal government will take 10%. It used to be 15% under the repealed VAT Act. State government 55% and local government will take 35%. Now, the VAT, the 55% that is allocated to, the 55% allocated to states and the 35% allocated to local government, before that be allocated as follows, based criteria. 50% of it will be shared based on equality of states. 20% will be shared based on population, while 30% will be based on place of consumption. So this is a paradigm shift from the sharing formula under the defunct value-added tax regime. Under the current tax law, federal government will take 10%, the state government take 55%, local government take 35%, and the 55% that goes to all the state government, it will be shared not equally among all the states in Nigeria, but based on certain criteria or formula, which is 50% on equality basis. That is, 50% of the 55% that goes to all the states will be shared among all the states equally. So let's say the VAT revenue going to the state, which is the 50%, let's say it is 1 billion naira, for instance. Meaning that 500 million, which is 50%, will be shared among all the 36 states of Nigeria equally. Then 20% out of that 1 billion, which is 200 million, will be shared among the states based on your population, while the remaining 30% will be shared based on where the VAT income is generated from. So under this arrangement, the states that benefit more are the states where the VAT income are generated, which in this case will most likely be Lagos State and states like Kano and Rivers State. But because we operate a fiscal federalism, every state has equally been taken care of using other criteria. There's also increased penalty for non-compliance. This new law is critical on compliance by taxpayers. They need to file your tax returns within time, and failure to do so now carries a higher penalty. Failure to file return, for instance, is now 100,000 naira only for first month and 50,000 naira only for every subsequent month of default. There is also a 5 million naira penalty for awarding contracts to individuals or entities that are not registered for tax purposes. So under the current Nigerian tax laws, every individual and corporate entities must be registered with revenue authorities for tax purposes, and you get your TIN. And the law says that any company or individual that award contracts to an individual or a company that is not registered for purpose of tax, that it shall be an offense, and the penalty will be 5 million naira for each commission of that offense. Now, the new tax regime, also repealed the FRS Establishment Act, that is the act that established the Federal Inland Revenue Service (FRS) was also repealed, and we now have, and in replacement is the Nigerian Revenue Service Establishment Act, that is the NRS Establishment Act, thereby renaming FRS to NRS. So the Federal Inland Revenue Service that we know today, effective January, their name will now be the Nigeria Revenue Service. That is NRS, no longer FIRS. The new law also authorizes the Accountant General of the Federation to deduct any unremitted revenue owed by any government or any MDA or agency. The Accountant General of the Federation has the power to deduct such unremitted taxes from their budgetary allocations or other funds that may be due to them and remitted to the relevant tax authority, which in this case is the Nigerian Revenue Service. Now, let's look at, so what we have been discussing since are the 4 tax laws which are highlighted. We have discussed the first one, which is the major one, which is the Nigerian Tax Act, the NTA. So we have also discussed the Nigerian Tax Administration Act, which relates to administration of taxes. Then the Nigerian Revenue Service Act, which replaced the repealed FRS Establishment Act. The last is the Joint Revenue Board Act. This act establishes a body called Joint Revenue Board. And Section 23 of the Joint Revenue Board Establishment Act re-establishes a body called Tax Appeal Tribunal. Tax Appeal Tribunal has been in existence in Nigeria, and it was created or recognized under the defunct or the repealed FRS Establishment Act. I think it's Section 59 of the repealed FRS Act that created Tax Appeal Tribunal. Tax Appeal Tribunal is a quasi-judicial body established by law, and it has jurisdiction over all tax disputes arising from the application of any of the federal taxes. Before now, the jurisdiction is over Value Added Tax Act, Petroleum Profit Tax Act, Company Income Tax Act, Value Added Tax Act, Capital Gain Tax Act, etc., and other federal taxes. That is before now, under the previous regime. But because currently all these various federal taxes have been consolidated under the Nigerian Tax Act, so the jurisdiction of the Tax Appeal Tribunal is now on the Nigerian Tax Act, which has consolidated all those previous federal tax legislations which I have mentioned earlier. In this case, Personal Income Tax Act, Value Added Tax Act, PPT, the Petroleum Profit Tax Act, Capital Gain Tax Act, etc., etc. The Tax Appeal Tribunal has divisions across the country, and each division has a chairman plus 4 commissioners. They have jurisdiction over any issues, implementation, assessment, or complaint arising today under the implementation of any tax under the Nigerian Tax Act. They sit in various divisions across the country, and I was privileged to have served for 6 years, that's 3 years of 2 terms, total 6 years at the Tax Southwest. So, where we had jurisdiction over federal taxes, including Value Added Tax, Petroleum Profit Act, Capital Gains Tax Act, and CITA, Company Income Tax Act. Another major provision of the joint establishment is the establishment of tax ombudsman office. So, at the NRS office, an office will be established called tax ombudsman. Tax ombudsman is an internal tax resolution inside NRS itself. Meaning that if a client or a taxpayer is challenging the tax imposed on him, or is challenging a tax assessment, or is challenging a tax decision, before you rush to tax appeal tribunal, it's expected that you must explore the internal dispute resolution mechanism provided under the NJ, the Joint Revenue Board Establishment Act. You must have explored the tax ombudsman office to resolve that issue. It is when that the tax ombudsman outcome or ruling or decision or recommendation is not satisfactory to you, or it's not acceptable to you, that you cannot have recourse to the tax appeal tribunal. A lot of questions in this regard. So that if we establish a tax ombudsman's office at the Nigerian Revenue Service headquarters, or at their various regional offices, maybe in Port Harcourt and Kano, in the NRS, in which case people may want to have concerns around their impartiality. That look, if there is an internal dispute resolution mechanism at the NRS office, and the person that will man it is also an officer of the NRS, are we likely to get fair consideration of our complaint? These are some of the issues. Or will the tax ombudsman be a neutral, a tax neutral, maybe a tax professional or a neutral, to be appointed from outside? So people have concerns as to of a tax ombudsman, but I don't think that calls for any concern, because it's an internal dispute resolution mechanism which you are encouraged to explore. It's like you giving a pre-action notice that, look, can we take another look at this? I don't think they are right. Now, finally, one major laudable innovative provisions of the new tax laws is the codification of the practice of advanced tax ruling system. Various jurisdictions, advanced tax jurisdictions across the world, they have what is called advanced tax ruling system. Advanced tax ruling system is a system where a taxpayer or his tax advisor or his lawyer can seek advanced clarification to what extent. So you can make and seek clarification whether it's taxable, whether it's subject to exemption under relevant exemptions, and if taxable, under which law and to what extent. This is a very common tool often used in advanced tax jurisdictions. And in our jurisdiction, it will be a very good practice, especially because it helps foreign investors. When a foreign company or a foreign investor is contemplating coming to a country to come and do business, one of their important considerations in their business destination is the tax regime, the tax environment of that country. So they want to seek tax advice that, okay, we are coming to Nigeria to come and invest 1 billion US dollars, and it's going to be into, and the business we want to explore is into fishing. We want to go into the business of fishing, that is high level fishing. We want to establish dams, we want to bring in fishing boats, we want to go into seafoods. And they are not sure whether there are some tax reliefs or exemptions for that business, or they are not sure to what if there are exemptions, or at what percentage, or they just want to be sure of the tax treatment of that business. So what they can do is to get a lawyer or a tax advisor to apply to the revenue authority to seek tax clarification. And when you seek it, they will now make what they call advanced tax ruling, which guides you on the tax treatment of the proposed transaction or business you want to go into. Please, 1 minute. Just a minute, please. Who is it? Okay, don't worry. That's him. Let him. Sorry for that breaking transmission. So, advanced tax ruling system has now been codified under our new tax regime, and lawyers and tax advisors can take advantage of it. And like I said, the purpose of it is that it helps business owners, foreign investors to know in advance what will be the tax treatment of their business or their transaction if they go into it, so that they can make provision for it. And like I said, tax implication of any transaction is very, very important to a businessman, because tax is an important business consideration. Tax is an important business consideration. Now, what are the opportunities for lawyers under the new tax laws? What are the opportunities for lawyers under the new tax laws? Like I said earlier, whenever there is a new tax legislation, or indeed any form of legislation, whether labor and employment law legislation, maritime legislation, any form of legislation, that creates opportunity for lawyers, because there will be gray areas where clients will need legal opinion. So one major opportunity for lawyers here is that the new tax regime, there will to be area clear where taxpayers, our clients, we want to seek legal opinion on the application or applicability of a particular tax law to their business or to a transaction. A particular tax exemption applies to their transaction. So legal opinions, it is expected, will continue to be sought by taxpayers under the new tax regime. Two, whenever there is a new tax law, or whenever a country contemplates measures that will be taken. So currently, the shifted the overseeing research and tax to abuse their under taxpayers are testing the tax to them or a particular tax decision, or they are contesting the tax imposed on them. So they will need the services of lawyers to formulate issues for them to submit to the tax ombudsman for resolution. Even prospective businessmen and foreign investors that want to come to Nigeria opinions under these tax laws on our proposed investment in Nigeria, because taxation is an important investment decision. An important contributory factors is the environment for. And when investors are coming to seek legal opinions on Nigerian tax environment, it is expected that services of tax lawyers will be sought. That is an opportunity. And where taxpayers are dissatisfied, and I see that happening from next year under the new tax regime when it takes effect, that there may be some assessments, funding assessments, which taxpayers will like to contest. When they want to contest it and they want to go to tax appeal tribunal, lawyers will have opportunity to represent them. At the tax appeal tribunal, lawyers and chartered accountants, chartered accountants, they all of representation, they all have right of audience before the tax appeal tribunal. Unlike regular courts, it's only lawyers that can appear. Before TAT, lawyers do appear, chartered tax practitioners do appear, chartered accountants do appear. So it is expected that the new tax laws may generate a lot of contest between taxpayers and tax authorities, and taxpayers may want to challenge any tax assessment that they consider to be unlawful or excessive. And in that case, tax appeal tribunal may be very busy starting from 2026. It may be busier than they are currently in view of the new tax laws. So if that happens, the lawyers are expected to take up the challenge, and these are opportunities. So having told you about these enormous opportunities available for lawyers under the new tax regime, let me quickly warn that you cannot take benefit of those opportunities unless you are prepared for it. And preparation means that you must invest heavily on capacity development. To advise a client, you yourself must know the tax laws. Otherwise, a blind man will be advising a blind man, and both of them may enter into pit. So, importance of capacity development for lawyers cannot be overemphasized. So, if you are already into tax practice, you need to deepen your capacity development in response to the challenges that will be posed by the new tax regime. And how do you do this? You do this by reading relevant literature. There are a lot of literatures on taxation online. As a matter of fact, the Big Four appear to have dominated that space. When I say the Big Four, I mean the Ernst & Young, the PwC, PricewaterhouseCoopers, Deloitte, and KPMG. if you go to their website, they issue regular tax opinions on recent development in taxation in Nigeria. And their write-ups, their newsletter are usually very good. If you read them, you will be abreast with recent development in taxation. You'll be abreast with a lot of information on the Nigerian tax space, which will help your practice. You must invest on tax law reports. I know that Tax Appeal Tribunal, during my tenure, I know we had a tax report that compiled the tax cases decided by TAT for those 6 years. You must read tax law report and understand the thinking of courts so that you can advise your clients when the need arises. Buy tax textbooks, latest tax textbooks, cases and materials on taxation written by experts. Read them. And let me tell you, you don't expect a client to come to your office that they are coming to see you. And when they come, they tell you their tax-related problem. You must have a minimum idea. You can't tell them that, okay, I've listened to you, I will get back to you on your show. Every client give back problem come to the position of the law there, but once they raise it with you, you must have